that maybe, Governor, you need to consider automating this process, because the excess expenditure was due to the fact that there were transportation costs that went up and logistical costs. And members thought that things like moving the checks and even the check process itself, it is better that this process be automated so that you do not have to incur additional costs on administrative costs. We have directed this to other counties as well, that instead of writing checks, there is a way in which you can use technology to send that payment direct to the institutions. So maybe you can comment on that.
Well advised, Chair, but I will address you as a politician. You can see what you will take away from a politician, you know, and that's, you understand. So that is, I think that is the challenge, but I agree with you. We realized that the 3% threshold was quite low. I think it was only meeting 50% of our requirements. And so we thought also that other than, we had thought of, I think, providing money in the budget differently, because we have a voted for public participation. Unfortunately, we had not thought of working around that. So, but I still agree with you. It's very, very unfortunate that this matter also seems to be coming to an end, because looking and listening to the way everything is going around is like, this is considered as a national government function. And we too have considered it, but we are thinking also of continuing to offer the bursary around our core mandates, which is ECD and technical and vocational training. So that is where we are now focusing, and I think we will use the same method you have prescribed for us, where you simply give a schedule and the bank can do the RTS, or we can even do money transfer, and that will be okay. So we are well advised.
Thank you very much. So, honorable members, unless you have an issue on this, we can proceed. This was an unmodified opinion. So congratulations, Governor.
Thank you.
We know bursary what happens in other counties.
Yes, we don't.
So now we will, I don't know whether the relevant officers are here. We will proceed to the other 3 funds, starting with the Climate Change Fund. So those who have finished their job can go. Bring in the others for the 3 funds. Governor, the staff who have joined us can be put on record.
Thank you, Chair. You can put yours.
Chair, I'm Bernard Kiama, the Chief Officer. I am Bernard Kiamba, Chief Officer, Department of Water, Environment and Climate Change. Thank you.
CP Beatrice Muturi, Fund Administrator, Climate Change and Water.
I'm Yvonne Madenge.
Why are you not looking confident, the gracious lady? Okay, proceed.
I'm Yvonne Madenge,
Usijali, sisi tuko hapa.
Director Environment and Climate Change.
I'm Martin Moreidi, Accountant for the fund.
Chair, through the Governor, my name is George Mwangi, the Chief Officer in charge of Trade, Cooperatives, Culture and Tourism.
Okay, so we are starting with the Climate Change Fund. There were two issues which honorable members, we discussed them during the pre-meeting. And the first issue is on compliance, legal compliance. That is late submission of financial statements. And the auditor reported that the financial statements, the reporting timelines is 30th September 2024. But then it was submitted on the 7th of November 2024. So we really don't want to spend much time on this because this is a compliance issue. So maybe, Governor, you can explain to the committee what happened, that the submission was done more than 1 month later.
Thank you very much, Chair. The late submission of our financial statements was as a result of unclear reporting structure from the National Treasury FLOCA Program Implementation Union, the PIU, before the reporting timeline of 30th September. The lack of a reporting template was a challenge since PIU gives condition on how they require the financial reports, whereby deviation of the same calls for non-compliance. After the county's outcry on lack of a reporting template, it was sent on the 25th of September 2024 and thereafter on the 2nd and the 7th October. PIU held a virtual meeting taking the fund accountants, fund administrators, auditors, and the directors through the reporting template, which was still after the submission deadline, resulting in the delay in submission. So that is really what happened.
Auditor, your comments?
Thank you, Chair. The explanation is there, but it was the issue of compliance of law. The law requires that you use, so it's law.
So you see, Governor, you have given an explanation, but they say the law is an us. The law is the law.
It's true, it's true.
So
you see, Chair, the problem emanated from Treasury. It is not from us. So that is the challenge, but we are in breach because the law stipulates that date, but we didn't meet the deadline because we couldn't. And sometimes bureaucracy becomes a big challenge, especially around that. And even if we were to say the truth, the structure and of the FLOCA program left counties out. It was just something that was just, so that is a big challenge, but I think we have overcome it now because the dates are there. The other challenge which I need to raise with you, Chair, as the protector of devolution, is also that even the money that was promised never came. It never comes in full, yet it is a loan and that has been taken around, or even a grant. But what the counties receive, as maybe you even see there, the next response is that we are expecting 124. We either get it late or it doesn't even come at all. And when it does, it's a challenge. So these are the challenges around FLOCA, which we all want to support because it's about the future of our country. But sometimes we have those challenges. I submit, Chair.
Okay. I would like the legal officer to read out the provisions of the law in regards to this matter.
Thank you, Chair. On the issue of late submission, it's provided for under Section 62 of the Public Conduct Act. Firstly, and there is Section 47 that provides the timelines. That is the timelines for submission of documents for this audit. It should be submitted within 3 months after the end of the fiscal year. And then under Section 62, it's on the offenses of late submission. Under subsection 1 of that said Section 62, it reads that a person shall not, and then the relevant paragraphs is paragraph B and C, without a justification, fail to provide information required under this Act, and then C, without justification, fail to provide information within a reasonable time that is required under this Act, that is the Public Conduct Act. And then the penalty is under subsection 2, that reads a person who contravenes subsection 1, commits an offense, and is liable on conviction to a fine not exceeding 5 million shillings, or to imprisonment for a term not exceeding 3 years, or to both. And then, Chair, there is also Section 66 on the same, on eligibility to hold public office, that provides that a person is convicted of an offense under this Act, that is the Public Conduct Act, shall not be eligible to hold public office or work with an entity held in part by the state for a period of 10 years following the conviction if one is convicted of any offense under the Public Conduct Act. Thank you, Chair.
So you can hear, especially the accounting officers, you know you can be punished by just this mere delay. Either 3 years imprisonment, a fine of how much?
5 million.
5 million, or both, or you are declared not fit to hold public office. So you strive to make sure that the financial statements are sent to the auditors on or before 30th September 2020, within the whichever year it is. Otherwise, these simple things can mess your life. So, any comment?
No,
Senator
Chair, just my question to the auditor, whether they have compiled the 2024-2025.
Thank you, Chair. They have complied in submission of 2024-2025. In fact, we have already done the audit.
You have?
Yes.
Okay, then we had the query on budgetary control and performance. I am trying to save on time, so I just want the governor, you comment on this. This is about underfunding.
Yes.
And underutilization. So you can tell us what exactly happened.
Chair, I had just mentioned, but the approved county budget of 23-24 was 212,792,760. But the actual amount received was 124,020,274 as indicated, resulting in an underfunding of about 88,772,186, which was budgeted for but was not released, especially because it was, I think, in the act of the additional, the saga. Yes. Yeah. And you remember the saga we had around that time. Yeah. Now, an expenditure of Kenya shillings 42,528 was incurred as tabulated in our table below, leaving a balance of 81,492,274. So the actual utilization was around 34% and not an utilization of 8% as indicated, because we had spent around 88,772,486. The absorption of funds was as a result of late disbursement, as indicated with tables, with the dates in table 1. The donor fund CCIS and CRIG funds were received past mid-year of financial year 23-24 to the counties, resulting in low absorption. County contribution determined by availability of funds and cash flow from disbursement released to counties by the National Treasury. So we had that challenge. And we have a table there which shows what was approved, what was actually received, and the date it was received, and the variants. Additionally, in accordance to the program grant manual, page 11 to 13, which we have attached, under the minimum performance condition for CCRI, climate change resilience investment grant, the county was to record an expenditure of more than 50% of the budgeted amount by 31st March. In accordance to the revised program appraisal document, by the time of the assessment, which was set for February 2025, the county was expected to have paid or contracted at least 50% of the funds in the climate change fund account from financial year 2023-24, both from the county contribution and climate change resilience investment grant, which we have given their chair as Annex 2. But really, if you look at that, it is just what I had mentioned. We budget for a figure which has initially comes from Treasury, then somewhere along the line, the money doesn't come. Even when it comes, I do not know whether, Chair, the other person has told you how difficult it is to get approval from the controller of budget. We occasionally keep moving goalposts. Every other day there is this, there is that, until it's a big challenge. So that is why we end up being where we are.
I think I'm interested in knowing more about this, the delay in remitting the additional allocation, because our understanding is the additional allocation, particularly the donor component, is money that has already been released to government. So if it is money that has already been released to government and the Senate has passed the law, why should there be a delay in remitting the money to the counties?
This was a unique year, Chair. I remember that we had even to engage CS Bandy, because the whole idea was that there was the issue of RMLF, which delayed the passing of the SIGA between the two houses. Okay. We had now we realized already that by the time we engaged with him from the SIGA, they had already reduced by 32 billion, the same figures. And we had to now re-engage, and because there was this feeling from Treasury that counties would not be able to absorb that money within the timeline. But we said already, because we had also other timelines set, we had already contracted and engaged, because the figures were in our budgets. We may not have had the cash, but because a figure is in a budget, it allows for procurement and many other things. So that is how we ended up now. I remember reducing the deficit from that to around 24. So that was a challenge. But until we really want to, the truth of the matter is that devolution is under threat, because we can only be powerful devolved units when we get money in time and we spend it as we should. Now the challenge is the money takes time to come. You as the Senate, and I always want to appreciate how hard you have fought for devolution.
Comments from members?
Chair. Thank you, Chair, for that question. And as you have put it rightly, for us, we only release money that has already been received by the counties through acquisition. And at the beginning of every financial year, the Control of Budget issues guidelines which the counties should follow whenever they are seeking approval of funds. So unless there is a specific case that was delayed beyond time, then we can be able to check on it. But if the county is following the laid down guidelines as issued in a circular by the Control of Budget, there's no reason as to why there should be any delay when it comes to the requisitioning for funds. But I would be interested to know if there was a specific one, then we can be able to respond.
In all languages, what she expects. Give them even templates, and she does so. But the next day, we are again in the quarter. It moves away from templates. It is now in legal. It even goes to whether this is a function of accounting. We have a control of budget who wants to be an auditor. She also wants to be a control of budget. That is the truth. So we cannot be hard on here. Ours is just to say, as I am speaking on behalf of Nyeri.
Thank you. I do not want us to debate about the control of budget.
Maybe, Chair, with your permission, through the governor.
No, not about the control.
No, not about the controller. Mine is on counter funding, because counties are required to do counter funding, and we make every effort to factor in that money in the budgets. Unfortunately, the corresponding contribution, either from the donor or from whoever, does not come in time. So it puts us into another spin. You have already committed that money, and as you wait for the other money to flow, it does not flow. And I'll give an example. We have what we call the county aggregation industrial parks. Counties injected money, we factored in that money, but we never got a corresponding cent from the national government. So that puts you in a very big quagmire. And that is the same thing with FLOCA, the fund we are now discussing now, because as a county we put in money for counter funding. So the question is, what will be rolled out? What commitments would you make when you have not received the counter funding from the other end? So I think that's a matter that needs to be looked at in a very critical way, so that we don't again put money, and on the other side we don't get the other side of the bargain. Thank you, Chair.
I get your point. We have, I don't want to go on with this discussion around control of budget, because we had a meeting with the control of budget, and we directed that they need to prioritize automation, so that all these things they are doing manually, they can do it online. And it is pointless that we have officers from the Office of the Controller of Budget in every county. And then still, when counties want requisition, they have to come to Nairobi. So those issues we have had a meeting with the Controller of Budget, and we have put to her the same questions that we have. So I do not want to debate it further here. We will call her to give us an update of what she has done on the same.
Yeah, just to add, national government can do everything they want online in as far as our office is concerned. The only challenge is with counties. It's important that you know that. National government does everything online. ourselves, it's physical. You can see there is some form of problem there. I thought you are seized of the matter.
Yeah.
Chair, through you, Governor, senators are defenders of devolution. So the challenges that you're having, make sure that as a COG, you're meeting with senators and telling us what are your challenges so that we can solve them from where we sit.
Thank you.
Yeah, but again, also senators, you know, we must also criticize ourselves. The Constitution gives us the powers to participate in budget making for constitutional offices, including the control of budget. But we have left that role to the National Assembly, who have no interest of counties. So you find the Office of the Control of Budget is underfunded. Even the Auditor General here is highly underfunded because no one wants to give people who are going to look at their books money. So I think one of the things we need to do as a Senate is to insist on implementation of, is it article, legal is, which article is that? 2, the article that requires Parliament, which means Senate and National Assembly, to participate in budget making for constitutional offices and commission. I think it's 249.
Yes, it's 249. It's Article 249, subclause 3, that reads, Parliament shall allocate adequate funds to enable each commission and the dependent office to perform its functions, and the budget of each commission and the dependent office shall be a separate vote. Thank you, Chair.
Yeah, so that is where, honorable senators, I think we need to insist, so that budget making Senate should participate, at least for commissions and constitutional offices, so that if controller of budget cannot automate because he has no money, we'll give her money. So that is a debate for another day. So honorable members, we will now move to the last 2 funds. Senator Chimera, put yourself on record.
Thank you, Chair, members, Governor and your team. My name is Senator Chimera, member of this committee.
So we can have the officers for the other 2 funds.
It looks like you are underfunded. There is no coffee.
No, it is there.
I have
you have not asked.
Coffee after answering so many questions.
So the officers who have come can be given a chance to put themselves on record.
George Mwangi once again, Chief Officer, Department of Trade, Cooperatives, Culture and Tourism.
Miriam Mwaniki, the FAD admin.
Through the chair, my name is Justin Mundia, Trade Development Officer, EDF Secretariat, Nyeri County. Thank you.
Through the chair, Harrison Gary, Principal Trade Officer, Secretariat, EDF.
Through the chair, Nancy Gatai, Accountant, Car Loans and Mortgage Fund.
Okay, so honorable members, we are going to start with the county executive car loan and mortgage fund. So I will request the auditor to give us a brief overview of this report.
These are new officers, Chair.
No, they were there before.
They introduced themselves.
Yes.
Thank you, Chair. This is the Auditor General report on financial statement of Nyeri County Executive Car Loan and Mortgage for Staff Scheme Fund. It was a qualified report with two issues. The first issue, Chair, is on unaccounted for fringe benefit tax, which no, it is not addressed. Then the second issue, Chair, is on unconfirmed interest income, and the issue has been addressed. The third issue is on budgeted interest income shortfall, not addressed. And the last issue, Chair, is loans disbursement without mandatory documents. The documents were provided, but the issue is not addressed.
But you have indicated is addressed.
You have checked, Chair, because this one was not provided during the audit. It was provided, now they have already provided documents.
So
now.
it is a late submission.
Yes.
Okay, so we will look at the three issues which are not addressed, but maybe before we go far, Governor, you know this particular fund is the most misused fund in the counties. The most misused fund nearly in all counties. And I've been struggling to see anything that we have been seeing in other counties. I haven't seen it in your report. Things like non-performing loans, things like loans having been taken without insurance, without security, things like people having awarded themselves huge loans than their pay can cover. So maybe we can start from there. Is there any non-performing loans?
Maybe, Chair, we should start that by the fact that I have never borrowed a shilling from that loan.
Yes.
I've been governor 2 terms, I've never borrowed. The only person I've seen, and I've seen it today, is my deputy. I've seen him here. But what we have done in Nyeri County is ensure that since I have no interest, and I have said I don't, everything is done according to the book. There is an independent committee that sits to approve. And when I realized that the executive were not able to borrow also, we opened it to chief officers. If chief officers were not able, we allowed even, I think we went as far as directors or something. All staff, anybody who could borrow, but on condition that you met the requirements. So we have a strict, and that is why maybe even some of the issues are arising, that we have not realized the interest that we would have, because we never gave the entire amount, and we were only able to. Initially, I must also say we had only one CEC who borrowed and left, but he cleared his loan. He was appointed elsewhere. And I think under KPCU or something, but he continued to pay the loan. So we do not have any defaulters. Our staff pay as they should, and they are very strict because they look at the period that within which you can pay. So any other issue around the loans, I am surprised other things are happening. We don't allow that. You know, one of the challenges you must understand, Chairman, is that I am a person who speaks his heart, so I must be very careful with the things I do. So I submit that unless you raise the specific
Can you
issues.
confirm that there was no non-performing loans?
Thank you, Chair. I can confirm that during our audit, we never came across non-performing loans.
So that thing, I think we must congratulate you for that, Governor. That you are doing well among the worst. Because this one has really been an issue in many counties. So I think we'll start with the first query. That is an accounted for fringe benefit tax.
Thank you.
Auditor, proceed.
Thank you, Chair. This is the report of the Auditor General County, Nyeri County Executive Car Loan and Mortgage Staff Scheme Fund for the year ended 30th June 2024. The overall opinion is qualified. Paragraph number 1, unaccounted for fringe benefits tax. The statement of financial performance reflects use of goods and services amounting to Kenya shillings 1,524,122 as disclosed in Note 7 to the financial statements. Included in the expenditure is fringe benefits tax of Kenya shillings 885,712, which does not agree with the supporting schedules of Kenya shillings 621,712, resulting to an unexplained and unreconciled variance of Kenya shillings 264,000. Further, review of tax computation schedule provided for audit revealed that the fund had an outstanding fringe benefits tax of Kenya shillings 881,424, an accumulated interest of Kenya shillings 715,660, all totaling to Kenya shillings 1,596,662 as at 30th June 2024, and unpaid tax arrears amounting to Kenya shillings 30,301,063. In addition, the fund administrator failed to remit taxes within the prescribed time period, which might attract interest and penalties on the outstanding amounts. In the circumstances, the regularity, accuracy, and completeness of the fringe benefits tax amount of Kenya shillings 885,712 could not be confirmed. Thank you, Chair.
So, Auditor, then there are several issues here. There is the issue of reconciliation, a variance of 264,000. Then there is the issue of tax, accumulated interest of 715,660. And then there is a further issue of unpaid tax arrears of 30 million. Is that the case?
That is the case, Chair.
Okay, so Governor, you can give us your management response.
Thank you. Let me kindly allow me to ask the Chief Officer to handle that.
Chair, through the Governor, our management response, the figure of 885,712 consists of fringe benefit tax that was paid to Kenya Revenue Authority since the inception of the fund to August 2023, which was paid via two payment voucher, 626,412.30 cents and 259,299.10 cents, which were provided for audit, and this is supported by Annex 1A. So that is the issue that was raised on 885,712 that could not be confirmed. So further, the management had not remitted the fringe benefit tax amounted to 1.826, 119.5 for financial year 2023-2024 due to the low uptake of the loan, hence the low interest income, which is utilized to defray operating expense of the fund as per the fund regulations. The management paid the unpaid fringe benefit tax of 1.826119.50 in financial year 2024-2025, and that was the total fringe benefit tax that were not paid for 2023-2024. On unpaid tax arrears amounting to 30.3, the unpaid tax arrears amounting to 30,300,001,063 was a demand from the Kenya Revenue Authority for the various tax head under the county government of Nyeri for financial year 2017-2018 to 2021-2023. The only tax head relating to the funds is the fringe benefit tax, which was in arrears of 626,412, which was settled as per the payment voucher above, which was in Annex 1A. So it's the same. That is only the one that was relating to the fringe for the fund, but the rest is for the county government of Nyeri executive accounts.
What is your comment on the response?
Thank you, Chair. They provided documents, but it's the aspect of late submission. They were not provided during the audit. So,
but have they responded to your question, your query?
Chair, the documents they are provided, they are responded to the query, but we, according to our policy as an office, if documents were not provided during the audit, we don't accept after, because where were those documents?
So there is an issue of late submission of documents. But before I come to that, let's address the substance of the matter here. Can I request members to chip in? Any member who is ready?
Chair, it's just asking why the documents or any information was not availed to the auditors on entry, meeting or exit meeting.
Chair, through His Excellency the Governor, these documents were available and was provided because that payment vouchers were even made before that time, and the payments were made that time. So it can be confirmed from the check transfers that they were there and they were submitted.
Did you provide them to the auditor? That is the question.
Yes, it was provided. Maybe, I don't know where they skipped the auditor.
Auditor, is it in your schedule? Because you usually maintain a schedule of the things you want, and is a checklist. Is it there?
Thank you, Chair. The reason why it ended up in our report is that the documents were not provided that time. Because we had issued a query, then we issue an email, and then we issue a draft report, and then the final report.
Through you, Chair. So, Auditor, you say that on the exit meeting you had not received those documents?
Yes, Chair.
Any other issue? The accountant through the governor, when I look at your Annex 1A, the payment voucher that you have put there, it is not looking original. If you look at it, honorable members, it's not looking original, because my expectation would be the document would have been fully processed. If you look at, for example, on the examination part, voucher examination part, it is not filled at all. It is only AI order who has signed, but everyone else it is empty. So maybe you can explain that.
Maybe Chair, may I allow me to take you to the third page after that, where you find the family bank account, which indicates clearly that that money was transferred to KRA on the strength of this voucher. It is highlighted 626,412 transferred on the 30th of January 2024. RTGS from County Assembly, Nyeri to Kenya Revenue Authority.
The one that is marked in, is it in green?
I think it is in some form of yellow. You know, I'm a man and we can't tell the colors properly.
That is fine, but you know the vouchers that have been provided are largely incomplete. Even the second voucher of 259,000, it is...
Our accountant explains so that...
Through the Governor, Chair, these are the third vouchers. We usually, the accounting officer and the accountants are the ones who sign the voucher, but maybe in future we can be forwarding to the examination office.
Not in future, that's supposed to be the process. I thought all vouchers go for examination. Maybe the auditor, you can guide us on this.
Thank you, Chair. It's a requirement that the payment voucher goes to examination, so that is why they start provision to confirm the accuracy, the pay, and so forth.
Through you, Chair.
Yes.
Maybe we can inquire then who is the accountant who was meant to have signed and did not sign, and is he here? Is he in good books with the ISPAC?
Through the Governor, the accountant who was signed there, and I'm in good books with the ISPAC.
You know, accountant, what members want is where is a complete voucher. I'm sure before the payment was made, it goes through all these processes. So the complete voucher, because what we are seeing here is not complete.
I have noted that, Chair, and I will ensure that it is done as it should. I think that was an oversight on their part.
Thank you, Chair. Maybe through the Governor, I just want the fund manager to make something clear to me. Yeah. This amount is being paid from the executive, but the RTGS is being seen to come from the County Assembly of Nyeri. Why the mix-up? I thought they operate separate accounts.
Okay, through the Governor, Chair, we usually bank with the County Assembly the same bank, so the bank made the error of narrating the County Assembly, and it's an issue that we wrote to the bank, and they say they are going to correct the error.
Chair, do you have that letter here?
We don't have it here, but we can request it.
And we note that this transaction happened on 31st January 2024. So the error has not been corrected. Maybe the auditor, did you pick that?
Thank you, Chair. The issue was the issue of variances, because you can see what was paid was not supported in the schedules when you look at our query.
So the auditor, the accountant through the governor, do you have the complete voucher for this?
Through the governor, the original voucher also looks like this one, the copy.
See why I'm concerned is because the voucher did not go through examination, it did not go through internal audit, and important information like the vote head, sub-vote head is not included. And then it's not signed at the end. Any comment before I give a direction on this? So auditor, let me direct this. Auditor, now that you are doing, have you completed the audit or it's ongoing?
Chair, we have completed. We are now at the reporting stage.
You are at the reporting stage.
Yes.
I would like you to go and look at this matter afresh. So you look at the documents that are there and verify the transaction, the bank transaction, and advise us in the 2024-2025 report. But we have also seen an anomaly there, because how come the voucher was paid without going through all the stages? Mark?
Yeah, maybe Chair, the other aspect is to do with the penalties and charges for late payment, whether that was paid and whether that was charged on the account or as per PFM on the individual who failed to remit these taxes on time. Thank you, Chair.
Yeah, accountant through the governor.
Through the governor, we only paid the principal amounts because as the time we were paying, there was an amnesty by KRA.
Now those issues you need to look at it, auditor. All those complete issues and come back to us. So I think we'll put this pending until we look at 2024-2025. So you can mark that, auditor. So let's go to the next item, which was budgeted interest income shortfall.
Thank you, Chair. Budgeted, the paragraph on budgeted interest income shortfall, the statement of comparison of budget and actual amounts reflects a reported final budget under interest income amounting to Kenya shillings 6,450,513 and actual amount of Kenya shillings 1,599,208, resulting to income shortfall of Kenya shillings 4,851,208, or about 75% of the budgeted interest income. In the circumstances, the budgeting of revenue income seems to have been unrealistic. Thank you, Chair.
Governor, the management response.
I will ask the Chief Officer to answer that.
Chair, through the Governor, our response is that the fund had budgeted to disburse loan amounting to 230,440,734, which could have yielded an interest income of 6,450,512, but only managed to disburse 70,600,000, earning an interest of 1.599208. This shortfall of interest income was occasioned by the non-disbursement of all the fund as anticipated. We anticipated to disburse 230 million, but we only disbursed 70,600,000. 600,000 that yield 1.9. So the rest of the fund we never disbursed as at that particular time.
So what is happening? People are not coming forward to borrow.
So that time they have not applied. So later they have applied. Now they have absorbed all the fund. So we'll have that interest income.
Auditor, your comments?
Thank you, Chair. This was the issue of budgetary performance and as a control. So, but as we will be able to confirm in the current audit whether they have absorbed the money as budgeted.
But maybe from the layman, you see now they budgeted, but did the fund receive that money? Did the fund receive the 230 million?
Maybe, Chair, without getting into a lot of jargon, this is common sense.
Yeah.
If we planned to disburse loans worth 230 million,
yeah,
at a certain percentage, we expected to receive 6 million as interest. We didn't do that. People borrowed only up to 70 million. I think the issue should be, did we get the interest for the 70 million? Because that is where the issue should. The rest is neither here nor there. A budget is just a projection. So we just projected.
So the fact is that people did not come.
They did not borrow, including myself. Yeah, and I was supposed to get almost 40-50 million.
You must be a very rich guy.
No. I learned to live within my means.
Okay, members. Okay, if there is no any query there, we proceed to the last query, which is loans disbursed without mandatory documentation.
Thank you, Chair. The paragraph on loans disbursed without mandatory documentation, the report of the fund administrator stated that during the year under review, the fund disbursed a total of 16 loan applications amounting to Kenya shillings 70,600,000. However, loans amounting to Kenya shillings 21,200,000 were advanced without the required mandatory documents such as approvals, approved drawings, mortgage insurance, protection policy, and valuation reports. In the circumstances, the fund might be exposed to financial losses through non-recoverability of loans disbursed without adhering to the provisions defined in the regulations. Thank you, Chair.
Governor, your response?
Kindly.
Chair, through the Governor, our management response, all the loans disbursed were fully approved by the Fund Administration Committee via the minutes prescribed for audit as shown in Annex 3A, and these loans were disbursed, the 21.2 were disbursed to 5 officers as listed, and the supporting documents are provided in Annex 3B to Annex 3F. Further, as a means of ensuring that the county government does not suffer any financial loss due to non-repayment of loan, if any, the properties used as a security for the loan must be valued, and the amount to be disbursed must be of the same value or lower. Should there be any default in payment of loan, which may necessitate recovery of the funds, the regulations provide that the property used to secure the loan may be used to recover the funds through institution of legal proceedings, and this is these documents were attached. The valuation reports, the title deeds, the log books for the car loans were attached in Annex 3B to Annex 3F. On the issue of insurance, the mortgage protection policy, which is against death and permanent disability, is maintained by the bank administering the fund, that is Family Bank, on behalf of the county government of Nyeri. This is as per the agreement between the bank and the county government as Annex 3G.
Auditor, your comments on the response?
Thank you, Chair. This was the issue of, though they have submitted the documents, but it is the issue of late submission or not provided during the audit.
So a question again, what about does it address your concern?
Chair, based on the documents also, we are not document experts, but they have provided the documents we didn't have. And as per the policy of the office, when the documents are provided after the audit, we don't accept.
Honorable members. This matter of late submission of documents really puts us in an awkward position, Governor, because when the audit is done and the documents are not given, and then suddenly they appear before us during this meeting, it becomes very difficult to know who is telling the truth. Is it yourself or the auditor? So I think moving forward, members, we would need to see a checklist that was processed then, whether what was requested by the auditor was given or not. Yeah, because it really puts us in a position where we are not auditors, so we cannot audit the documents that are given to us in this meeting. Number two, the law is very clear on this. Section 62 of the Public Audit Act on late submission of documents. So, like now the auditor is saying that he can't say much because the documents were given late. So I don't know, honorable members, this matter is one of the matters that we can push to the current audit to include it as an issue in the current audit. Governor.
Thank you very much, Chair. I really want to pick the direction you have given.
Yeah.
You know, we sometimes think auditors come from heaven. And we have a tendency of thinking that counties, for example, why would these documents appear today? They are there and available and they can see that they were stapled. Why don't they give you a schedule of what they received? Because we must also agree that audit is a process. It's not a one-time thing that they are going to get in and get everything. When there is an issue they raise, they get documents. There could have been a schedule given, but it must be built by both the two teams so that we never have this embarrassing moment where I'm producing documents and it is said they never received them. Why don't we have that, like you have given, a schedule that shows on our entry, we wanted this, we got this, we raised questions on this, we were provided with this, then it would be appearing there, and then I would have nowhere to run. But now, the documents are available, you have just found them. It is between you and me to know, because I wasn't in the audit, whether my when I think we must agree on that, and that direction you have given would be the very, very best to support both yourselves and ourselves, and even the auditors, so that this issue of someone thinking this did not happen. One other thing I must also plead is that I do not know who told auditors that they must find mistakes. I don't know. The kind of training they have is that even if you have done everything else that you do, they must come up with maybe the spelling was wrong. I mean, really, is this what we really want to do? When you look at what we have presented objectively, are you convinced that a shilling is lost in Nyeri? I mean, that is what I think the audit should be. That is what is looking for. So, your guidance is very good, and it should also be from both parties, that When you come in, we know there is an audit. I know it is our burden, because it's us who are being burdened to provide every document. But these documents are documents that have been run over a year, and it is possible, as the human beings we are, somebody will bring this and leave that. But there should be that schedule now before you, and where you say, okay, you said you didn't receive this, I can see it on the schedule. Because I do not know, Chair, if you have had the opportunity of getting into a room where the auditors are. You don't see them behind the documents. When they land in an office, they are brought maybe in here, there are files and everything. A document could get lost in that process. But I agree from our end, and I think this is a direction you have given which is correct. Every document that goes there should be forwarded with a signature that I have received this, so that we are able to move, so that we stop casting aspersions on them or ourselves or our officers, so that everything is done fairly. Chair, thank you very much.
Maybe, Chair, with the permission of the governor and through the governor and your permission, this is a matter that I've always demanded as a CC Finance. And I think we have engaged with the audit office and said, let's have a checklist that is signed by both by the auditor and our accountants, or whoever the submitter of the document should be. That has not come to fruition. So I'm happy that you have taken that route, because that gap will be filled. To add on to this particular fund, the securities that have been given against the loans borrowed are deposited in another bank, that is Cooperative Bank, just to reduce the risks. So it will be another process for us to write to the bank and call for these documents. And maybe the auditors are asking for these documents toward the end. But the security is, the position is all these security documents are already in a bank as a security within a different account and within a different bank. So not any loan was advanced or given without securities. So I think it's just that misunderstanding between the auditors and our office on timelines and that checklist. So I'm happy that you're giving that direction, because we shall now see where the gap will be going forward. Thank you.
I don't want it to be a back and forth thing between us. The auditors are actually, although they are independent, but in this kind of arrangement, they are like our technical arm for this committee. So if there are any other issues, we will discuss it internally. But let me give the chance to Mark.
Thank you very much. It's important to note that the audit process is well documented, and in fact is provided in the Public Audit Act. The very start, the very initial stage of an audit is that we do a letter indicating to the client that we'll be arriving on a particular date. And we also give them a letter of understanding, which also indicates the documents that we'll be requiring. In the course of the audit, Chair, we make requests for documents that we need, and which, if not provided, then this issue comes up in the management letter, minutes of which are provided, which are there, documented in the file. During the management exit meeting, we further raise the issues of what we may need. Whatever has not been provided, Chair, then goes to the management letter, which gives the client another opportunity to respond and provide documents. When that is not provided in management letter, Chair, we also do what we call the draft report, which is now another opportunity for the client, telling them, this is how the report will look like, and these are the queries that we have raised. We give them another opportunity to provide these documents. When they fail to do that, then that's when it appears in the audit report. So, Chair, the client has several opportunities to provide these documents, and it's only at the final stage of certification that then we report as indicated. Chair, I also wish to point out that as auditors, our role is to do financial and compliance audit. Chair, you can confirm that there were 2 reports of the county that we found no fault in the financial statements, and we issued an unqualified opinion. So, Your Excellency the Governor, where things are okay, we point out and we give unqualified opinion. But where there is non-compliance with the law, Chair, it's an obligation under the Constitution for us to report to this committee where there was a failure to comply with any sections of the law. Thank you, Chair.
You see, I don't, as I said, if we have any issues, we will discuss internally. But I think, Governor, what needs to be done is the process of audit should be one of the very important activity in the county, where even your key officers must take the lead, so to ensure that all the documents that are requested are provided to the auditor, and that the entire process is managed. Because in most counties, what we have seen, you find that some of the audit queries may arise out of just not taking the process seriously. Yeah. So I think that, to me, that would be the recommended way to do. I've seen some counties where they even give people like deputy governors the role to manage the process of the audit, because they seem to be having extra time on them. Or the CEC finance fully involved until the process is completed, so that we don't have those gaps. Yeah, yeah.
Thank you.
Okay, honorable members, so this one is an issue which we want you to verify again for 2024-2025 report. So let's proceed to the last report, which is County Enterprise Development Fund for the financial year 2024-2025. Auditor.
Thank you, Chair. The report of the Auditor General on the financial statement of Nyeri County Enterprise Development Fund for 2024-2025 was a qualified report with 12 issues, out of which 5 were addressed, 7 remain unaddressed. So, Chair, the first issue was, it was not addressed, was non-performing loans.
Thank you, Chair. The overall opinion.
Just wait a moment. Honorable members, in our pre-meeting, we agreed that the main query here is non-performing loans, which we'll look at, and then there are other queries which are related to this. Issues of failure to levy penalties, issues of unvalued securities, loans which were awarded without the board vetting. So I think, auditors, you read, let us just combine those issues at once. So in reading the query, you may need to read all the queries I've mentioned, and then the response will be given after for each of those queries.
Thank you, Chair. Well guided. The overall opinion is qualified. Number 1, paragraph number 1, uninsured loans. The financial statements reflect Kenya shillings 33,230,159.
Wait a minute. Uninsured loans, I thought you said this is addressed.
This is where we have the sub-components of the other observations. They are under paragraph 1. Under 1, we have 5 observations, Chair.
And underperforming loans is where?
Yeah. It's under 1.1.1.1.
Okay, proceed.
Thank you, Chair. Uninsured loans. The financial statements reflects Kenya shillings 33,230,159 in respect of receivables from exchange transactions as disclosed in note 13 for loans advanced by the fund. However, review of documents for insurance payments revealed that the insurance policy paid was valid for 1 year only, yet the loans disbursed were supposed to be repaid in 2 years as stated in the signed letter of offer. It was further noted that the letter of offer did not indicate that the insurance was supposed to be renewed on an annual basis, and there was no renewed insurance policies, indicating that the loans were uninsured for 1 year, exposing the fund to possible loss of funds in case beneficiaries passed on or experienced permanent and total disability, resulting in inability to repay the loans. In addition, the following observations were made. 1. Since the inception of the fund, 182 beneficiaries have received loans, out of which 12 loans carrying a total amount of Kenya shillings 4,600,000 were found to be non-performing, since the beneficiaries have never made any repayment to the fund since the time they were issued with the loans. 2. As per the loan agreements, the beneficiaries were supposed to repay the loans over a period of 24 months. Review of outstanding loans showed that a total of 83 beneficiaries who had outstanding loans amounting to Kenya shillings 11,795,231 as at 30th June 2024 had not cleared their loans over that period, meaning that the period stipulated in the signed contracts had lapsed and there was no addendum to the signed contracts granting the beneficiaries additional time to repay the loan. Yet, management have not recovered the loans from the securities held. 3. In the financial year under review, 41 beneficiaries were awarded loans amounting to Kenya shillings 16,350,000, out of which 19 beneficiaries who were awarded loans amounting to Kenya shillings 8 million were non-performing since they had not made monthly repayments for the last 90 days, and as per the guidelines issued by the CEC Finance, management was supposed to instruct auctioneers to repossess the securities. This raises doubt as to whether the vetting process of the beneficiaries in regard to their capacity to repay the loans was done thoroughly. 4. The loan statement showed that management did not charge penalties to the beneficiaries who failed to make payments as per the guidelines issued by the CEC Finance. 5. The loan statements of the beneficiaries showed that there were those who overpaid their balances, raising doubt as to whether the beneficiaries have access to their own statements showing the correct amount of outstanding balances. In the circumstances, the accuracy, completeness, and recoverability of the receivables from exchange transactions amount of Kenya shillings that 2,325,570 could not be confirmed.
Okay, so now proceed to the next query, which is unvalued loan securities.
Thank you, Chair.
And then you go to the last one, which is loans awarded without board vetting.
Thank you, Chair. Unvalued loan securities, loans totaling to Kenya shillings 16,350,000 were disbursed to 41 beneficiaries, out of which 34 loans amounting to Kenya shillings 13,450,000 were secured with land titles. However, no valuation report was provided to confirm value of the land. Therefore, it was not possible to confirm whether the management would be able to recover the outstanding loan amounts in case of default. In the circumstances, recoverability of the amount outstanding loans may not be possible in case of default, as the value of the land may not be commensurate to the amount of loan advanced. Therefore, the value of money is doubtful. Loans awarded without board vetting. The financial statements reflects receivables from exchange transactions balance of Kenya shillings 32,325,570 as disclosed in note 13. However, review of list of members recommended by the board for loan advances indicated that out of the 41 beneficiaries issued with loans in the year under review, there were 9 beneficiaries who were issued with loans amounting to Kenya shillings 3,700,000 were not among those vetted by the board, contrary to Section 25 of the Nyeri County Enterprise Development Fund Amendment Act of 2018, which requires details on the purpose for which the loan will be utilized and the capability of the beneficiaries to repay the loans be evaluated before approval. In the circumstances, management was in breach of the law. Thank you, Chair.
Okay, I think we'll look at those queries. Now, Governor, maybe can give us a management response.
Thank you very much.
Starting with the query, the first query, which has several components in it.
Correct, Chair.
Yeah.
Maybe just, I will allow the Chief Officer to take us through, but before that, I want to just give some facts. The minimum amount of money we can lend in this fund is 50,000, and the maximum is 500,000. Those are the figures we are talking about. We are not able to give beyond that. We give only 50 to 500,000. And then I will ask the Chief Officer to take us through each of the management responses. Thank you, Chair.
Thank you, Chair. Through the Governor, on the issue of unsecured loans, all loans issued under the fund are insured for a period of 2 years. However, the initial loan documentation provided by the insurer erroneously indicated a 1-year coverage period due to system error. The fund sought a clarification that the insurer agent who confirmed that all loans are insured covered for a period of 2 years, as you can see in Annex 1, where we sought a clarification through an email, and we got that clarification that you can see the highlighted part. Going to the other issue, Chair, through the Governor, the following observations were made. So I want to say, in our management response, we said that the management has intensified efforts on all outstanding loans as detailed in our attached annexes. If you look at Annex 2, we have made phone calls. If you look at Annex 3, we have issued demand letters, and in particular to Scholastica Wamoyo, Francis Kingori Gekunju, Dennis Kariuki, Dongo, and Anthony Irongo in Annex 3. Repayment of outstanding loans identified in the past as non-performing Annex can be shown in Annex 4, that actually they have been able to start servicing them. We have also initiated legal action, Chair, through the Governor. If you look at Annex 5, we have already instructed the County Attorney to start that process, which he has already started, and pre-qualification of auctioneers. So this goes in a process. So the first one is as an SMS, as I have indicated. The second one is a demand letter. Then there is also the issue of the legal process, which will culminate in auctioneers, which have already now pre-qualified as indicated in Annex 6. These measures have elicited positive response from some beneficiaries who have made payments leading to updated loan statements. The Secretariat continues to perform regular follow-up to ensure sustained recovery progress. If I go to the next issue, the management has escalated the loan recovery by issuing demand letters, which I have already given in the other response, which we did in the communications, which is already again in Annex 3, and arrangement, and have already engaged the county, which is very important, this one, Annex 5, Annex 7, that we are now going to ensure that we go the legal way to recover this money. Yes. Through the chair, the other response, the management has a standard loan approval and vetting tool that informs capability of potential loan repayee as attached there in Annex 8. To ensure efficient loan repayment, the management is in the process of improving the loan appraisal and vetting by incorporating a credit rating mechanism to ensure that only borrowers with capability to pay are issued with loans. Additionally, management has implemented loan recovery measures, including issuing demand letters and pursuing legal action for all non-performing loans as annexed in 5 and 7. On issue number 4, the management could not apply the penalties as per the guidelines on the defaulted loans as they contravenes the Banking Act Cap 488, Section 44, as detailed in the Annex 9. An institution shall be limited in what it may recover from a debtor with respect to a non-performing loan to a maximum amount under subsection 2. 2. The maximum amount referred in subsection 1 is the sum of the following: the principal owing when the loan becomes non-performing, B, interest in accordance with the contract between the debtor and the institution, not exceeding the principal owing when the loan becomes non-performing, and C, the expenses incurred in recovery of the amount owed by the debtor. Further, the management has reviewed the FAD guidelines to conform to the Banking Act Cap 488 to address the above challenges. The guidelines are awaiting approval and gazettement as indicated in Annex 10. In response to issue number 5, our management response is some of the beneficiaries intentionally made overpayments expecting to reduce future payments or skip installments in subsequent months. In addition, the management informs all beneficiaries of the loans balances monthly via SMS. This is exemplified by a beneficiary's data with an overpayment and an extract of an SMS sent to loanee on the balance attached is in Annex 11. In addition, the final operates transparency, informing the balances through SMS, consequently allowing beneficiaries to access and verify their loan balances through their loan statements. So if I go to the okay. On issue number 6, unvalued loan securities, our response is the management noted the issue of unvalued loans securities and in adoption to and has adopted the pre-qualified property valuers from the county government who will value the land before disbursement going forward as annexed in marked number 12. In the issue, the management vetted all applicants as per the regulations and guidelines of the fund, and they appear in the board's minutes. Minute 15 of October 2023, loan appraisal report. However, in the minutes provided, majority of the loan applicants appeared in their business names as indicated in the table below as Annex 13. Where we are given the serial number, the name, the annual disbursement, date of disbursement, and the response. So Alice Wanjiku, for example, appears in the minutes as number 40, listed as Alice Wanjuko, which was basically a typo. Charles Karoga appears in the minutes number 27 as Labels Restaurant, while Frederick Mwangi, number 3, appears in the minutes as number 13 as Judea Academy, while Joseph Kagonda Washira appears as number 37, highlighted in the minutes as number 37. Luce Murugi Mwangi also was highlighted in the minutes as number 7. In total, that's what we are saying, that sometimes the name is the applicant has given their name as opposed to a company, whereas maybe they applied as a company. That's what we are trying to demonstrate in that.
Okay.
Submit, Chair.
Thank you. So, Auditor, maybe you can give us your comments on each part of the query, starting with the first part of 6.1.
Thank you, Chair. The first issue was addressed, that is the issue of insurance policy paid for 1 year. They have been able to provide the evidence that by insurance company that they have covered for 2 years.
So
Then the second issue, 1.1.
Did you look at the letter from the insurance?
Yes, Chair.
Because what I have here is an email.
They wrote to us through email, Chair.
Okay. They couldn't write.
Yeah, they did. I think it was an email.
Yes, it's an email.
Yeah.
So, Auditor, you are satisfied with the email response?
Chair, since it is coming from the insurance, we were satisfied.
Okay. Proceed to the next part.
So the next issue is the one of 182 beneficiaries who receive loan and were not, out of which 4,600,000 were not performing. The issue remained unaddressed. And the next issue on 83 beneficiaries who had outstanding loans amounting to 11,795,231. The issue also remained unaddressed. Then the next issue on non-performing loan, where 19 beneficiaries who were awarded loans amounting to 8 million were non-performing. The issue also remained unaddressed. Then the next issue on failure to levy penalties, the issue remained not addressed. Then the issue on loan overpayments, the issue is addressed. Then lastly, Chair, on the issue of second last loan value to securities, the issue is not addressed. Then the last one, loans awarded without forfeiting, the issue is addressed.
So, honorable members, there are quite a number of parts. I don't know, you need to internalize all of them in your head. There was the issue of unsecured loan insurance part, which now has been confirmed that the clarification from the insurance agent was given. Then there was the issue of unsecured loans of 12 loans amounting to 4.6 million, which the response is there, demand letters and all those, it's there. Then we had an issue of period for repayment, which was supposed to be repaid over 24 months, but some applicants had not cleared their loans over that period. Then we had the issue of the 41 applicants, beneficiaries who were given 16.3 million, but 19 beneficiaries awarded an amount of 8 million were unperforming because they were not paying monthly payments, for 90 days against the guidelines by CEC Finance. Then we have the issue of penalties, which were not charged, contrary to the guidelines by CEC Finance. Then we had the issue of overpayment of balances. Then we had the issue of unvalued loan securities. Then we had the issue of loans awarded without board vetting. So as you debate, those are the issues which are all related. So maybe I can start off on the issue of underperforming loans. I see that demand letters have been written, phone calls have been made, and legal action is being contemplated. So maybe I would like to know from the fund administrator, the demand letters that you have given us, they were written in January 2025. What is the responses? Is there any response to the demand letters? And secondly, why the demand letters were written, were signed by the administrator? I thought a serious demand letter from the county should be signed by the county attorney. Maybe we can start from there.
Chair, through the governor, I'd like to indicate that the indicated Scholastica, Francis, is just a sample of the ones who were issued with demand letters. And if you look at the last page of the annex, you will see a summary of the unpaid loans to show that if you look, it's a sample. Scholastica has a demand letter. If you go to the bank statement, you will see she has paid. In fact, she's the first person in Annex 4. And then there is a small schedule there at the back of the annex to indicate that this person indeed has paid 68 to 20. So this was just to show that those who seem not to have, the loans that seem not to have been performing are now, at least there is some payment that is coming in after the intervention that the fund has done.
What about the issue of the letters being processed by the fund administrator and not the county attorney?
Maybe, Chair, allow me to just give a background a little so that we understand this fund. This fund has grown from an initial seed capital of 30 million to 90 million. As we are speaking, we are way below the international standard for loan default, which is between 1 and 3%. When you are lending 50,000 to an individual, that goes with also a lot of risk. We are struggling to ensure that we are balancing between addressing these people who could not even, because one of the challenges in Kenya in terms of provision of, of loans is collateral. And you agree with me, when you are giving 50,000, so that I can answer that question on valuation, and someone brings you a plot, for example, worth about 100 or 200,000 in Nyeri, subjecting that individual again to a valuation report is an extra cost. And if it is, when we tried it, we realized this individual is taking home 30,000 because the valuer now takes away all the money. And since the fund was to develop these low-level people, we kind of now relied on only verification of documents, that plot exists and it is there, and surely no land in Nyeri is worth 50,000, even a grave. That is the truth. And so we have the titles, they are available. when you look at this other issue of people who claim to have not been, because it is said that they were not verified or something. It's an individual who owns a business, applies as himself or herself, but then the name again appears as when we were discussing this, we realized it was also our fault because we needed to have identity of an individual, not over. We've gone further. Some of these, there could even, when you see someone that is unsecured, is where we realized that an individual was totally unable to raise collateral. So what did we do? We introduced asset financing. You buy we buy you a motorbike, you leave us with a logbook, and then you go earning and pay daily. So these are some of the challenges we have. And I thought that is why I needed to give that background, so that as you look at this fund, you just see it as what it is. The fact that we put $500,000, no, you can't borrow beyond that, is because we could realize, there is also this other tendency, Chair, that people think government money is never supposed to be paid. So we keep pushing. You can see now we are almost headed to another level where we are going to the courts to take the people to court. And we are simply seeking, even now that our lawyer is on it, they have already started engaging the defaulters. And then the next thing I think will just be auctioneer. When I appeared before you last year, you advised us because we did not have, auctioneers to procure them. Now we are moving in that direction. Thank you, Chair. I submit.
Senator Mbugo.
Thank you, Chair. First, allow me to commend the Nyeri County government for operating just one empowerment fund as opposed to many counties which appear here with several, for youth, for women, for persons with disability, and I think you reduce the cost. So this one is good. Only that in another engagement, I would want to know whether there is an intentional program to reach the underprivileged, especially the persons with disabilities. But my query is, these people who have overpaid, what is the plan of the fund? Because you are holding money for other people. So what are you planning to do?
Let me mention, Chair, that overpayment is not at the end, it's not at the tail end of the loan.
It is a monthly.
It is monthly, where someone now, this month business does well, you double pay, just hoping that you can reduce. Because, let me also mention, like Hustler Fund, you graduate. If we give you 50 this time and you pay well, then you get to 100, then you go on like that until nobody just walks in and takes 500. There has to be that gradual acceleration of payment.
Okay, any other question? How much money was put into this fund?
We started with an initial 10, then we added 20. But now it has grown up.
10 million?
Yes, 10 million.
So it's a small fund?
It's a small fund, now it's at 90.
Okay. Any other question? Again, looks like this, you are slightly better than your colleagues because we have serious problems with the empowerment funds in these counties. They give out loans and there is no effort to recover anything. There is no security. People are just given money to go and eat. So at least if we improve on what the auditor has pointed out,
yes,
like the issue of penalties, charging penalties, which you have said you are going to go the Banking Act way, the issue of loan securities, the issue of overpayment is not a problem actually. It is people who are anticipating maybe they will have problems with paying for the following month, so they pay in advance. I think and then the issue of approvals, the vetting and approvals by the board. I think if you did all that, you will be in a better place. But maybe this should be the first county we are seeing some level of good management in empowerment fund. The rest are giving us a lot of problems. So members, or any comment from the auditors? Yes.
Thank you, Chair. Ours is we'll be able to check the improvement, especially where they have issued some measures in terms of recovery. We are doing the audit, you can be able to see the impact. We'll be able to check whether there is impact on some of the measures they have undertaken. Thank you.
Yeah. Senator Tobiko?
Chair, I think this governor has done fairly well in majority of the funds. I mean, compared to his colleagues, he's done really well. Governor, you've done well.
Yes, so, you know, funds, and I would like the controller of budget to say something about these funds.
I must say that from the report, I checked they're submitting their reports on time. We do not have issues.
Okay. So I think we'll stop at that point. Members, if you have any closing remark before I invite Governor to make his closing remarks.
Chair, I follow suit in congratulating the governor because we've been in this committee. We've seen governors with the same funds and a lot of issues. So you are doing it well, but where we pointed out something, let your team go and correct. Thank you.
Senator Mbugo, anything? So, Governor.
Thank you very much. I must say, I've appeared before you a number of times. Yeah. And every time we leave this place, we leave refreshed. We see a champion for devolution. And ours is tasked to encourage you to continue fighting for devolution. For our colleagues, for the auditors, today I'm surprised I didn't see ESCC because they are always here to either intimidate or scare us. I don't know. But I never heard of them today. What I would want to say is that really, Chair, there are people who are struggling to do what is right. We just put in our effort to try and do what is right. And therefore, for any errors that we are found with, I think they are just human. They are not intentional. There has been no plan forever, to either swindle or do the wrong things. And therefore, I really want to appreciate. I must also appreciate the auditors because over the period of time we've been working together, issues they have raised are issues that we have been able to address. For us, I think we are not the same county government that came here in 2020 or 20. We have improved, and therefore, every single issue you have raised with us, we will address, and we will continue trying to do what is right. We really thank you very, very much for this opportunity, just to come and present for us what is there. We pray that all of us will work together towards a better Kenya. Thank you very, very much, Chair.
Okay, thank you very much. One, I must thank you for honoring our invitation and participating very actively, and your grasp of issues in your counties is exceptional. And indeed, there is better management of funds compared to many other counties. The issue of climate change, which is usually a very problematic area, the only thing you need to do there is to ask your officers to submit the financial statement in time. The issue of Elimu, which in most counties they call it bursary. This is a problem in nearly all the counties. So you have really tried. Maybe you just need to improve the process so that instead of doing physical checks, you pay the money electronically so that you reduce the cost of administration cost. On the matter of health services fund, again, the report was unmodified, but as we said, they will need to go and check and see whether it compares adequately with the FIF. On the issue of car loan and mortgage, we are surprised because this is another cash cow in most counties. You know, I was surprised that one of your counties, which I will not mention the name, a governor took a loan of 50 million and he's supposed to repay this loan in 5 years. Many other counties, former governors are still owing millions of money, which they never paid, but they paid themselves the gratuity after their period. And therefore there is nowhere you can recover the money. And there are so many unperforming loans. So this one is a big achievement that the car loan and mortgage of Nyeri has no issues that we have seen in other counties. Then the Enterprise Development Fund, all empowerment funds in our counties are a problem. You have very limited issues here, but you just go and improve on that. I want to commend that when we started looking at funds, audited reports in funds, there is some improvement in the way the counties are managing their funds. And I hope that will improve until we reach a level where the funds we establish in counties are running efficiently and in an accountable manner. So anyway, let me stop at that point and just wish you well. Your trip back to Nyeri safely. Thank you very much.
We appreciate it.
Yeah. Sasa ongea na hao na kungoja hapo nje. Ate?